Okay, so you want to own a plumbing company. Buy a van, hire a few licensed guys, answer the phone when someone's basement floods, and watch the invoices pile up. Here's the first number that should stop you before you go any further. Roto-Rooter, the largest commercial and residential plumbing company in America, a business so big it moves close to $900 million a year through its branches, runs at an adjusted EBITDA margin of around 22%. That's the best resourced, most efficient plumbing operation in the entire country. Now look at two real plumbing companies. Same size, same market, doing the exact same $1.5 million in annual revenue. One owner takes home about $60,000 a year, roughly what one of his own journeyman plumbers makes. The other, running the same size crew, answering the same after-hours calls, takes home $180,000 to $200,000. Same trucks, same market, same industry. That gap between those two owners is the entire story of this business. Understand it, and you understand plumbing. Miss it, and you can run a genuinely busy company, with a full schedule and a ringing phone, and still be the $60,000 owner instead of the $200,000 one. Let's start with why this industry moves as much money as it does. The US plumbing industry generated $169.8 billion in revenue in 2025, projected to climb to $191.4 billion in 2026, moving through roughly 132,000 businesses nationwide. The average plumbing business generates $1.28 million a year. Between 70 and 80% of plumbing services qualify as urgent, meaning this is one of the most recession-resistant service industries that exists, because a burst pipe doesn't wait for a good economy. But here's the part that surprises almost everyone stepping into this business for the first time. Median net margin across the industry sits at just 2 to 8%. Industry-leading operators hit 20 to 35%. That's not a small gap between average and great. It's the difference between barely surviving and building real wealth on the exact same call volume. So before you spend a single dollar, you need to understand that not all plumbing revenue is the same business wearing a different hat. Residential service calls average $300 to $500 a ticket. Commercial work averages $800 to $1,500. Emergency and drain cleaning work carries a completely different cost structure than new construction and remodel work. And here's the detail almost no owner tracks correctly. Most plumbing companies can tell you their blended gross margin to the dollar, something around 50% on average. Ask them for their margin broken out by service line, and you get a long pause, because that blended number is hiding the fact that high-margin drain cleaning is quietly subsidizing thin-margin new construction work, and neither the owner nor the books can tell you by how much until it's too late to fix. Now, what does it actually cost to get started? For a lean, solo operation, you're looking at $10,000 to $50,000. A used van, a starter toolkit, basic insurance, your licensing fees. But if you want to build a real company, one that can run 2 service vans, carry proper diagnostic equipment, and actually compete for commercial contracts, you're looking at closer to $127,000 in core startup equipment alone, roughly $80,000 for 2 service vans, $15,000 for specialized diagnostic gear like inspection cameras and leak detection, and $10,000 for initial tool sets. None of that includes your first year of payroll, insurance, marketing, or the parts inventory sitting in your van at any given moment. Here's the trap inside the trap, and it's not the equipment. Financial modeling on a real 2-van plumbing startup shows a year 1 EBITDA of negative $91,000, even with $190,000 already budgeted for payroll, and a cash low point of $712,000 needed by month 18 just to keep the doors open through the ramp-up period. Most new owners budget for the vans and the tools because those are the things they can see and touch. Almost nobody budgets correctly for the 18-month runway it actually takes for call volume, reputation, and repeat business to catch up to the payroll you're already committed to paying every single week. So let's say you've survived the setup. Now you need to understand the structural gate that shapes this entire industry more than almost any other trade: licensing. Unlike general contracting, where many states have no statewide license requirement at all, plumbing is one of the most tightly regulated trades in the country. Almost every state uses the same 4-tier structure: apprentice, journeyman, master, and in many states, a separate business-level contractor license on top of that. Becoming a journeyman typically requires 4 to 5 years, and 8,000 to 10,000 hours of supervised work. Reaching master plumber status requires another 1 to 7 years beyond that, depending on the state. Total time from apprentice to master, 7 to 12 years, before you're even legally allowed to pull your own permits or own your own company in most jurisdictions. Operate without that license, and the penalties aren't a slap on the wrist. Fines up to $5,000 per violation, and in some states, up to 10 years of imprisonment. This is the mechanism that keeps this industry from being flooded with undercapitalized competition, the way, say, general handyman work is. It's also the reason the barrier to entry isn't really the $127,000 in equipment. It's the decade of your life that has to happen before you're allowed to spend it. Here's the trap almost every new plumbing business owner falls into once they're finally licensed and pricing their own jobs. Underpricing, and specifically, pricing a job off the wrong labor number. Say you've got a journeyman earning $28 an hour. Add roughly 15% for payroll taxes, about $4.20. Add 12% for workers' compensation, which runs higher in plumbing than in most trades because of the physical risk involved, $3.35. Add 18% for health insurance and benefits, $5. That $28 an hour plumber is actually costing you close to $40.55 an hour before he's turned a single wrench on a paying job. Estimate your pricing using his base wage instead of that fully burdened number, and you have mathematically guaranteed yourself a loss on every hour he works. And because most plumbing companies use flat rate pricing instead of billing hourly, that mistake gets baked into every single flat rate menu price you post, silently, for as long as the pricing sheet stays unchanged. Now, here's what happens once a company survives all of that. Because 2025 and into 2026 has produced a genuine wave of plumbing company failures, even among genuinely established operators. J. McCabe Plumbing, a residential and commercial contractor that had served the South Bay area of California for over 20 years, filed for Chapter 11 bankruptcy in July of 2026, citing declining gross revenue and a wide gap between assets and liabilities. It wasn't isolated. Lifeline Plumbing, serving the Katy and West Houston area of Texas for 7 years, filed Chapter 11 in May of 2026, listing just over $317,000 in liabilities against only $87,000 in assets. Steinmetz Plumbing, operating in Fort Bend County, Texas for around 8 years, filed in December of 2025. A Tennessee-based plumbing service provider filed in February of 2026. Different states, different company ages, different specialties. Bankruptcy filings explicitly describe this as part of a broader wave of plumbing companies failing across the country right now. Here's the through line connecting all of them. None of these were businesses that ran out of demand. Plumbing is one of the most recession-resistant categories in home services, and call volume industry-wide has stayed strong. What connects them is the same structural mismatch sitting inside the trap point from earlier, a business with real revenue and real customers, undone by a cash position that couldn't survive the gap between what the company was earning on paper and what was actually sitting in the bank account when payroll, fuel, insurance, and truck payments all came due in the same week. A company can be genuinely busy, trucks out on calls all day, phones ringing constantly, and still be one slow month away from a filing, because busy and profitable are not the same word in this industry, and the gap between them is exactly what killed the $60,000 a year owner from the opening of this video, while his $200,000 a year competitor across town, doing the identical revenue, never noticed the difference. So where does the profit actually leak out, invisibly, month after month, for the companies that don't fail outright but never quite break through either? Truck stock shrinkage, the slow, unmeasured loss of parts and fittings off the van that never gets tracked and never shows up as a single dramatic loss. Unbilled change orders. A plumber discovers extra work mid-job, does it, and it simply never makes it onto the invoice. Real bookkeeping reviews have found 3 unbilled change orders in a single month, wiping out $12,000 in profit that never showed up anywhere on the books. And slow collections. Companies that don't bill the same day the job is completed and don't enforce a strict 30-day collection policy routinely bleed cash flow even while their revenue number looks perfectly healthy on the income statement. So who actually wins in this business? Almost never the operator chasing the widest possible service menu, taking every job that comes in regardless of margin. It's the companies disciplined enough to track profitability by service line, knowing precisely that drain cleaning nets 20%, while new installation nets 6%, instead of only knowing the blended 50% gross margin that hides both numbers inside each other. It's the companies that price every job off the fully burdened labor rate, not the number on the paycheck. It's the companies that invoice the same day the job is finished and enforce real collection terms instead of letting receivables drift past 30 days. And increasingly, it's the companies building recurring maintenance membership programs, a modest monthly or annual fee that guarantees priority service and inspections, because a subscribed customer base smooths out the same seasonal and demand swings that sink less disciplined competitors. An owner's income in this business comes from two places, same as most trades: a working salary and a year-end profit distribution. The average plumbing business owner earns somewhere between $94,000 and $120,000 in total income. Top-tier owners, running efficient operations with real pricing discipline, clear $145,000 in their first strong year and scale into multiple millions as they add trucks and territory. The gap between the median owner and the top-tier owner was never about which one worked harder or answered more calls. It's the exact same gap from the opening of this video, $60,000 versus $200,000 on the identical $1.5 million in revenue. Now let's run that same number two ways, because seeing it side by side is more convincing than any warning I could give you. The optimistic scenario: you're running a two-truck plumbing company doing $1.5 million in annual revenue. You price every job off your true burdened labor rate. You track profitability by service line instead of guessing from a blended number. You invoice same day and enforce your collection terms. And you've built a maintenance membership base that keeps calls coming in through the slow months. Run at an 18% net margin. That's $270,000 in profit for the year. Enough for a genuinely strong owner salary and real reinvestment in a third truck. The realistic scenario: you price jobs off base wage instead of burdened rate, without realizing the gap. Truck stock shrinkage and a handful of unbilled change orders quietly cost you $30,000 or more over the year without a single dramatic moment to notice it. Your invoicing lags a week behind completed jobs, and receivables start drifting past 45 days. Run that same $1.5 million in revenue through that reality, and your margin doesn't land at 18%. It lands somewhere closer to the 2 to 8% median. Or, in a genuinely bad month where a truck breaks down and a big receivable goes unpaid at the same time, it can flip negative entirely. You didn't do worse plumbing work in the bad year. You fixed the exact same pipes. The only thing that changed was whether the business behind the van was actually being run like one. So is owning a plumbing company worth it? It gives licensed tradespeople a genuinely durable path into ownership, in one of the few service industries that barely notices a recession, protected by a licensing structure that keeps out the undercapitalized competition every other home service trade has to fight off constantly. But it demands an owner who treats the business less like a trade and more like a company that happens to employ tradespeople. Someone who understands burdened labor rates, service line profitability, and same-day invoicing as fluently as they understand pipe schedules and code requirements. Every number in this script, the blended margin hiding two different businesses inside it, the 18-month cash runway, the unbilled change order nobody caught, exists for one reason. It filters out the owners who wanted to fix pipes from the owners who actually understand the business fixing pipes pays for. The van, the tools, and the license are the easy part, even with a decade of apprenticeship behind them. What separates the $200,000 owner from the $60,000 owner on the exact same revenue, in the exact same market, was never the quality of the plumbing. It was whether they ran the business with the same precision they brought to the pipe.